been a somber start to the beginning of the final quarter of this year. While U.S. equities may be at record highs, we did wake up to news of the deadliest shooting in U.S. history. And joining me now is Peter Cardillo of First Standard Financial, and he will weigh in on what we're seeing in terms of market action. Peter, great to have you here.
Good to be back.
Well, as we start out today's session, we did get headlines about what happened in Las Vegas, but we do need to focus on the markets. So I do want to ask you about your expectations for this quarter.
Well, obviously, this quarter is going to be a touchy one probably. And of course, we have several factors that could make this market be in for some sort of a bumpy road. But I don't think we're headed for any major correction just yet. Now, what are these factors that could impact some negativity? A stronger dollar, obviously, but even more importantly, perhaps yields moving higher, and we could see, the 10-year note perhaps get as high as 2.75 or 3%. Notice today's macro news. We saw the ISM manufacturing index come in better than expected. We saw the PMI come in better than expected. And we saw a reversal in construction spending. Three components that suggest that the economy is probably going to accelerate somewhat in the fourth quarter.
And Peter, I'm glad you mentioned those data points from this morning, because we did see strength in ISM manufacturing. So we are awaiting anything on tax reform that is concrete to get a better idea of what will transpire. But at the same time, political developments in Spain as well in Japan in the coming weeks will be closely monitored. So how do you see those events playing out?
Well, obviously, the situation in Spain was not only declared by the Prime Minister as illegal, but the European community also said this was an illegal act. Now, if that were to bring about disorderly conduct within the nation, obviously, that could be a negative for Europe in general. And of course, the situation in Japan, political situation, I don't think is going to erupt in anything that's going to be too negative going forward. But nevertheless, always that possibility.
And last but not least, Peter, I do want to touch on oil prices. Today we are seeing WTI as well as Brent futures down at least 1.5%. So given all the output cut expectations as well as inventories, what do you expect to see in this quarter?
Well, look, it's down today for two factors. One, the stronger dollar. But I think the real driver of today's decline is the fact that we saw compliance drop to 86 last month. And so, the market is very sensitive to that. There are headline news that unfortunately can influence the market by the actions of the traders. The market gets exaggerated with sell stop orders, and it just becomes a technical factor and not necessarily a reversal in a fundamental trend.
Okay, Peter, well, thank you so much for joining me at the beginning of the week, and I'll speak to you at the end of the week.